So the U.S. economy grew by less than 2% in the first quarter. That's according to the Commerce Department's Bureau of Economic Analysis. The number just came out today. It's the first time it's dipped in over a year and a half. Gross domestic product, GDP, increased by 1.6%, below what analysts were expecting, which was 2.2%. Joining me now is Mindy McIntosh, founder and CEO of McIntosh & Associates. Mindy, welcome. Good to have you.
Thanks for having me.
So what do you attribute this economic slowdown to? Earlier, we saw Donald Trump. He said it's a direct result of Bidenomics. What do you think?
You know, I'm actually thinking that it's more in line with what we're going to see coming up here. You know, we need to see some changes with even interest rates here on mortgages, so we can see some mortgage rates maybe come down. But in turn, people are going to need to touch base, obviously, with their financial side of things and their investors or advisors, because I think we're also going to see some of these short-term CDs that have been performing so well, right, our 6 and 7 month, well outperforming our long-term. I think we're going to see those slide back as well. And it's going to be a brief pause before we're going to see any changes here on inflation is really what I'm thinking. So we need to make sure that we stay well diversified and make sure we're understanding and really working and developing within our plan to make sure that we know what is coming and what this actually could look like for next quarter and as we move on throughout the year.
Yeah, you have to get your house in order to protect yourself. I do want to talk about the interest rates, the mortgage rates coming up, but first I want to ask you this. So the slower than expected growth, first quarter now, how might it affect things like prices at the store and the overall job market? That'll directly affect, you know, the average American.
We're still seeing job market slow, right? And we are still seeing, of course, increased costs of goods at the supermarket. It's causing consumer spending to slow a bit. But we're actually seeing some increase. You know, I just did take a look at some intellectual property, really such as like software. That went up by about 5%. So we need to look at things like that. Business equipment spending has been up. So as we look across the sectors and schemes, we need to really make sure that we're knowing where is spending coming from and what is happening overall with inflation. It's not going down, I think, anytime as soon as what we hoped, but I do think that this is starting to look at that lower than what was expected. To me, it's actually a good thing.
Okay. Well, inflation ticked up last month, farther away from the Fed's 2% target. So now we're going to get to the interest rates. How might that, along with GDP today, impact the Fed's anticipated rate cuts this year?
Well, I think a lot of times, too, even when we look at what's happening with the 10-year Treasury and yield curves, I really think that we need to take a look more long-term throughout this year. I'm hoping that we'll see things more what I call stabilize a little bit as we enter further into the year, see some of the inflation come down a bit, help stabilize things, which we'll see the change then, too, in the job market. So we'll see some openings there being more filled. I'm hoping then that we'll see a little bit more consumer spending, and we'll continue to see it more in the States as we're seeing this continued pressure so that the Americans are having, and just kind of the sense of uneasiness of what they should do next. So we need to make sure they're understanding how far is their dollar going. Their dollar's just not spending, of course, as long as it had before. So what's going to happen at the gas pump? What about the travel, air travel? And how are we seeing this into having our economic flow to be better?
Yep. All right. Well, the Fed watches the PCE index as a key inflation gauge as well. That comes out tomorrow, so we'll keep an eye on that. Hoping for the best. Mindy McIntosh, McIntosh & Associates. Thanks for your insight today. Appreciate it.
Thanks for having me.
Of course.
For all our viewers asking where One America News is heading in the future, we would like to introduce you to OAN Live. OAN Live is the best way to stay up to date on all of the hard-hitting, straight-shooting, national and international headlines. And the best part is, OAN Live is only $4.99 per month. All the credible, honest, unbiased reporting One America News offers at a fraction of the cost of cable. Just go to OANN.com to easily sign up for OAN Live and stay informed.